Yo, what's going on, guys? So, I'm not a financial advisor. It's not financial advice. And then the other thing I will say is I'm closing my Patreon probably tomorrow, so make sure you join that. And I actually did see Patreon did offer a free trial thing, so I actually might do that next week. I think you can get a free trial if you want, and you can watch my stream. So do that. And lastly, use that Apex Funded account code. Click the link in the description. Type in code SAVE80. Really good practice. Okay, so I'm gonna keep emphasizing that. All right, so this video I'm going to be going over my model, and I already did this in the Sunday night class, but I'm just gonna be going over it a little more structurally, and this is gonna be a much shorter video because I know you guys don't want to watch the hour-long video, right? Okay, so my model is the inverse model. Okay, I love it. I just have an extremely high win rate with it. You can do so much with it, and I'm going to show you what it is. So all it is basically when we take out some form of buy side or sell side. In this example, I use buy side. Okay, what I wait for is something like this, where we get some sort of fair value gap right here. Okay, and then we break that fair value gap, and instead of like a breaker or just a fair value gapping here, we already have a fair value gap we broke over here. Okay, and this is so good because you get a lot of guys who long here, a lot of algos long in here. They see we cut to their position, then they reverse, bring price back up to this, and then they reverse again and they short. Okay, and it's just such an important PD ray. And before I start showing you examples, my favorite inverse is when there's only one inside the leg. Okay, so I only like when there's one inside the whole leg. If there's two or three, it can get a little more advanced, and you can use two or three. By the way, I do think this is the draw on liquidity right now. You can use two or three, but you definitely need a lot more screen time if you're going to be using two or three, and you need to know what to expect. So basically, I'm going to show you a few examples. So first example would be something like, let me see if I can find one. I think something like, we had one today. Okay, so right here. Okay, and I'm going to start off with a little advanced of example because, again, as I say, I usually like one in the leg, but if you look right here, okay, this looks like a Judah swing. Okay, why does this look like a Judah swing? It's because we get a bunch of consolidation and then a random violent swing down, okay? Usually, most of the times, these violent candles down after some consolidation don't last long. But in this situation, what you'll notice is we had an inverse fair value gap up here, which is premium. Okay, so in this example, I'd probably use the one in premium, which this one was, but we also have an inverse fair value gap down here. Okay, technically, they both held. Okay, but what one did the bodies hold? The bodies held this one. So this one, you can see we held, and your stop loss for an inverse fair value gap is always a close back below. Okay, but when does it become active? An inverse fair value gap comes active when we close above it. Okay, and you can see in this example, if I draw the fair value gap from this low to this high, right, we close above it here. Now your long is right here, your stop is a close below it, which is, I've said, I don't know what risk or where that's going to be. It's going to be somewhere around there. And then your target's the next high, which would be right here. Okay, and then it would be the next high to that, which is right here. Okay, so in this example, what you can see happen is we actually hit the first target, but then we go back. And in this situation, because it's an internal liquidity hit, I would have gotten stop break even. But in this situation, you can see you close above it, you long right here, your stop is a close now below. We never close back below. You would get out half here, hold the other half till here, and you would just go against south break even. Okay, but you can still see the play ends up working, and we actually never still close back below this. So again, this is a little more advanced example, okay, but it still works. And the other thing I want to say is you always want to use inverses in relative with context, right? In this context, we are very high in the premium range. So if I were to go to a time frame and see, okay, we hit buy side here, right? If we hit buy side and we're very high, would this make sense to take? Probably not. You can see we kind of react off a little bit, but this was one of my Discord chat yesterday where someone mentioned, I was like, yeah, I went long it, and I think ES at the same time looked bearish. And it's just, you got to take them in context, right? The only reason this worked is because even though we were quite high, we had a bunch of low resistance liquidity engineered right here. So that's the reason why this worked, and this one didn't, because we already took buy side. Okay. So I'm going to go over example today. So today, if you look at the NQ chart, if you look at NQ this morning, I said I was going to go long if we violated this, if a candle violated this, okay? And I put that in my Discord chat. Did a candle ever violate this? Nope. But I bet you if a candle did violate this, I bet you we would at least gone to this high. Okay, and that tells me what? That tells me I can at least get some profits. And even if we don't push all the way back to these highs, if I were to get along here, the least I would expect is this high. Okay, and bodies tell you everything. Just because we wicked over it does not mean we violated it. And the only reason why I did like this long, if we did get it, is because we hit sell side here. We never got any confirmation long. If you can look, I always talk about confirmation setups, right? This would have been a spot to look for a confirmation setup from, right? We never got any. But we did hit sell side here, so if we violated this, I would have immediately stopped that log, but we never did. And we did have some low resistance liquidity up here, which was never hit. So again, here's an example of an inverse fair value gap that doesn't ever turn into an inverse, which is fine. You just don't long it, okay? Which is completely fine, okay? Another example, okay? Something like this, right? What was it? Oh yeah, right here. Okay, this is an inverse fair value gap right here. Okay, and this one, what you can see is it's used to support a little bit, and then it's used as resistance. So you can see it failed because we're just weighing the discount. And I would technically not call this a fail because this does work somewhat, right? You can see this does work. It works at least the internal liquidity, which I always say is a successful trade because you can always put yourself at break even if we hit internal. But you can see why this ended up failing because we held the OB. So the fact we never closed under the OB told me, okay, probably going to get stopped out here. And then once we really trade back above this, that's bullish, at least till the next high, which would be right here. Okay, so you can use these kind of 3 times. You can see, okay, we re-close above the inverse fair value gap. Now you kind of see a pushback above. Okay, another great example is something like this. Okay, why would I use this fair value gap? It's because this is the only one in the leg. Okay, and at the same time, if we look at where the draw on liquidity is at this point, looks like the draw is going to be right here. Okay, so if we go back to the 1 minute and go back to what I said, if we think the draw on liquidity is lower, doesn't matter we hit low a day, this is still getting used as an inverse, right? And you can just see we respect it, we go down, and obviously once we hit low a day, you move yourself to break even or whatever, and you would hold till the draw on liquidity, which is this black line, which we have not hit yet. Okay, so this is my prediction. And then like even right here, you can see we kind of break this, right? But why do I not like this as much? Is because there's an inverse fair value gap here, there's an inverse fair value gap here, there's one here, there's kind of 3 in this leg. So, and I think the draw is lower, so not one I'd use. This is the only one. If we hit it, I would have longed this, okay? Because during this time, why would I have longed this? Is because there's a really obvious high here, and even if we did reject this, the least I could get is a move up to here, move my south break even, and that's it. And this was the only one in the leg, or the only good one. I would have considered this one a good one because I guess this is something I can't explain. This is screen time, but I mean, there's too many gaps here for this to be a good one. But this is definitely a good one. It's a textbook fair value gap, no gaps in between. So yeah. Again, for this to have played out, we would have had to stop before this line, and then we would have had to make a fair value gap, and then we would have to go down. So obviously that never happened. So even if we did come back down to this fair value gap after hitting this high, I probably would not have longed it because, again, I always say, I don't like longing if we've hit the internal high because I don't have any first target. This would have been a really good one right here. We never traced to it. You can actually see we did come back up to it later, but this is on the south side of the curve, so I've seen that valid at this point. But if we hit it then, this would have been a good one because we rejected this fair value gap, and then this is for your confirmation entry, okay? I think there's a really good one with gold the other day. Oh yeah, it's right here. So we created kind of these relative equal highs up here, and we closed above this bearish fair value gap after using it once. See how you use it here? We closed above it, and then same thing. It kind of lines up with the new fair value gap. Even if this wasn't here, this probably would have worked. But you can see, like, we close above. All you do now is long the inverse, and this one is working. This one worked because context, right? We've hit this higher time frame fair value gap. We have relative equal highs above, so this one's one that's going to be working in context, right? Versus something like this. Remember, I always say I don't like fair value gaps with one in the sequence. Okay, but what do I do if there's multiple in the sequence? What you can do sometimes, you can go in the higher time frame, and you can see if it turns into one. Okay, and this actually does turn into one. See? So we violate it, you long this, and then your target's buy side, which would be the next high, which would be right here, which this one worked. So you can see, like in the 15-minute right here, we have a ton of fair value gaps. So what you do is you go to the higher time frame, see if it combines with the one, and you can see it did right here. And then now you just long this. And obviously this is a big time frame, so you got to go to lower time frame, like for like a smaller entry, which would be probably somewhere along the lines in here out of this 5-minute fair value gap. But again, hopefully you get the idea. Every move that plays out and hits the high is always based off an inverse fair value gap. That's why I love this model so much. Okay, so there's just a ton of examples. Again, you have to use them in context. They're so effective. They're so effective. I guarantee you ICT is gonna talk about these at some point, or just put a lot of emphasis on these. I do not watch his videos anymore, but these are just so effective, and I bet you he's gonna talk about them at some point in the future. I'm just not sure when. I don't watch his stuff anymore. But again, I've been on this wave. I've been using these for about 3 months now. They're so good, so I would recommend using them. And other than that, if you have any questions about these, ask me. Okay, some questions you guys will have will be like, oh, why do you use this one and not this one? That's just screen time. It's just there's little things you can't explain. You just see in the chart, and you've just seen it play over and over again, and you just see other setups that other people haven't. That's why. Okay, and that's something I can't explain at the moment. So but a lot of them I will be able to explain. So again, if you don't hesitate to ask me. You can join my Discord in the description, and I'll definitely answer your question. But other than that, I'll see you guys later. Peace.